Well, let's start as always with our commodities markets analysis today. Gold is looking pretty good despite the tariff flip-flop that we've seen, $3,046 an ounce. Silver, $30.38. Copper, $438.40. Platinum, $925.85. In all of this, we have three in green and one in red. And copper is the one in red, 0.41%. Silver is in green, 3.92% positive. And gold is 0.36% positive. Let's see what corn per ton, $459, wheat $530, cocoa $8,371. It's a bit down. It was more than this sometime last week. And of course, we've seen price of coffee and some other things go very high in the United States and other countries. Cotton is $63.77. And when we look at the percentage points here, it starts 0.27% down for corn, 0.19% up for wheat per ton here, and for cocoa it's 1.66% down per ton this afternoon, and cotton is 0.65% on the positive. Let's look at markets today, the performance of markets across the board. Since Friday, it's been in red, bleeding so seriously. Major stocks indexes plunged today as U.S. President Donald Trump shows no sign of backing away from his sweeping tariffs plan, and investors bet the mounting risk of a recession could see the Federal Reserve's quoting interest rates as early as May. Futures markets moved swiftly to price in almost 5/4 points, quoting U.S. rates this year, pulling Treasury yields down sharply and hampering the dollar on safe havens. S&P 500 futures slid nearly 5% in volatile trade, while Nasdaq futures dived 5.7%, adding to last week's almost $6 trillion in market losses. The pain likewise engulfed Europe, with the broad stock 600 down 5.3%. Remarkably, German DAX down 9.4%. Recent market darlings were particularly hot as investors were forced to sell what they owned. The French stock stumbled 11.5%, with Rheinmetall down 21%. The European banks index shed 4.8% and is down 20% from its recent closing high. In Asia, the Hang Seng is 12% dragged down in Hong Kong and was the largest since the height of a global financial crisis in 2008. In mainland Chinese blue chip, the index was down more than 7%, finding a floor only when the state media reported China's sovereign fund, Catherine Yunjin, was a buyer. The Japan's Nikkei sank 7.8% to its lows last seen in late 2023, while South Korea dropped 5%. MSCI's gauge of Asian Pacific shares fell as a growth-wrenching 7.8% to head for its largest single-day drop since 2008. All emerging Asian markets also under the waters, with India Nifty 50 sinking 4%. Not too good at all, I must tell you. Crude oil prices also extended losses. Everywhere is bleeding. The market is falling more than 3% as escalating trade tensions between the United States and China stoked fears of a recession that could reduce demand for crude oil, while OPEC Plus readies a supply increase. While U.S. West Texas Intermediate crude is $59.69, with a downward review of 3.71%. Brent is down $63.27. Bonnie Light is $78.62, down 2.84%. And for the OPEC basket, dealers offer $75.35, and that's a 2.70% negative. So all markets are reacting to what is happening in the United States and, of course, across the globe. Let's see how this plays out. Negotiations and renegotiations are ongoing as we speak.